All right, strap in and get ready for a great episode with Grant Stine, who is a CFO by trade, but who grew up in a household of business owners, real estate investors, has invested in real estate himself, and I like to think of him as bilingual, meaning he can hang in the conversation with the business owner, but he can also hang in the conversation with the CPA, and he can really translate between the two and play that intermediary. And you'll hear us get into a little bit of that. But strap in, get ready, because this is a fantastic, jam-packed episode full of good content, good information. On today's episode, I got a special guest, Grant Stine. Grant and I have done a bunch of work together. We've collaborated on a few different projects, and I've been fascinated with his insights and the perspective he brings. And so I think it's going to be a great conversation. Grant, thanks so much for being on, man.
Ian, thanks for having me, man. It's a pleasure to be here.
Yeah. Dude, we met a couple years ago. We were in the same mastermind group, and I don't think we actually connected a ton there. We actually met just totally like random, not random, I guess, but by chance at the REI Summit 2 years ago. You came up to me, you were like, Ian, and I was like, Grant? It was one of those like out of place, out of context things. I'm like, yeah, but you're here. Like it was odd happening, but we've connected a ton since then. Man, I think your insight more than anything as the overlap between CFO, EOS, real estate, like we speak all the same languages. And so it's been super, super fun working together. And I'm excited for the conversation today.
Yeah, me too, man. Yeah, it was a fun chance meeting. I was like, okay, I know Ian, but I don't know Ian. Let's just go for it. So, yeah, it's been good ever since.
Yeah, well, let's just dig in. Maybe give us a little context to your background, how you got to becoming a CFO. Like, did you always know that was what you wanted to do? Yeah, how'd you get
You'll
started?
you'll love this. I'm such an accountant in my thinking. So when I was in college, I went and found 15 of the most successful business guys I knew, and I asked them if you could go back to college, what would you major in? 14 out of 15 said accounting. So I went and majored in accounting. Never wanted to be a CPA. Always wanted to be a businessman, and to own my own business and to be an entrepreneur. It's what my parents have done my entire life, and so it's just in the blood, you know. So I went and got an accounting degree, a very technical degree, with no intentions of ever really being an accountant. um, but with that, when I got out of college, I went and worked for an accounting firm for a couple years, doing taxes, financial statement compilations. And my boss there, his name was Gary Morrison, amazing guy. He gave me a seat at the table that really changed my life. He brought me in on tax strategy meetings. He brought me in and just explained like the mechanics behind the scenes of strategy and of financial statements. And it really gave me an incredible foundation for what I've grown into, which is, a CFO of a company, an integrator, and then ultimately now I do a lot of fractional and advising CFO work for a lot of different companies.
Yeah. Yeah, tell me a little bit about the EOS side of things. How'd you get into that? Was that like light bulb moment when you
Yeah.
found it? Did it put language to stuff? I mean,
Yeah,
I
great
think it's not very
question.
common you see the CFO slide into that integrator seat.
Yeah, it's a great question. So, the company where I was a CFO for about 5 years, we were experiencing massive growth. We grew about 700% in 4 years, which broke everything, right? And we realized we needed systems to help us manage that growth. And so I was a huge fan of EOS. I actually found it through reading the book Traction and actually explored becoming an implementer at one time because I thought it was such a revolutionary framework for how to run your business. And so started planting some seeds to have it come into our organization. We found a really great implementer, and because I was the one driving getting it, I was the natural fit for the integrator seat. And so I sat in that finance and that integrator seat for about 2.5 years. And honestly, the structure of EOS is so helpful to the chaos that happens in so many businesses. And I found that really fascinating and really appealing. And the more I've gotten into it, I also find it a little bit lacking, which is where you and I often come in, right? I would say we're like EOS adjacent. We come in and we upgrade your EOS to make it actually fit for your business. But yeah, when I was sitting in those two seats, it was really strategic actually for me to understand wearing two hats, being my own boss in a sense. I was holding myself accountable for finance and even seeing how that doesn't work and how important it is to have correct accountability structures. Yeah, and so, that time as a CFO and under massive growth, you start to understand the foundations that are required for scaling. And fortunately for me, in the company I came into, the foundations were solid. And so we were able to scale rapidly and to do it well. And so I would say, like, from my time there, that's one of the biggest things I learned was what the foundation should look like if you want to be able to scale. And then the structures that are really helpful for doing that. And for our conversation today, I would say specifically financial structures and the financial foundation.
Yeah. What would be some examples of those things you see like that are maybe like fundamentals
Yeah.
versus necessary for scale and growth?
Yeah, I actually wouldn't distinguish between the two because with my experience across so many companies, the fundamentals are what's missing. And when you have the fundamentals solid, whether it's, one invoice or 100 invoices, if the fundamentals are solid, you can actually do either one pretty easily, whether that's going out to your client or coming in from a vendor, right? And so often what I'm talking about when I say the foundational kind of processes, and I would call architecture that should be there.
Mm.
It's kind of what you would call your controller type role. It's putting in those financial controls in place. Like, do you have processes for accounts receivable, for accounts payable, for what does it look like to close the books? Do you have a process in place that tells you that your financials are correct, that validates things? I have like a whole framework that I call the CFO Blueprint that kind of shows you all the different areas where this has to be dialed in. But really, it starts at bookkeeping. And a lot of people think they have that dialed. And then when you get in and poke around, it's a mess. And so it is the fundamentals. That's what we're talking about. And if you can get your fundamentals solid, then you're actually able to scale exponentially, usually through layers of like technology and people are what are required.
Man, that's great because I think this all kind of bleeds together and part of where I want to take this conversation because I think my initial reaction to why it's so rare to see the CFO sit in the integrator seat, I think is because the integrator has to be strategic and somewhat forward facing. And I think very often you come across CFOs who are, I call it rear view mirror, not windshield. And we've talked about this a little bit, but that idea of like a super controller
Yeah.
versus a CFO. Could you elaborate on that and kind of like what those differences are and what that looks like and how somebody might recognize which one they have or maybe which one they need?
Yeah, no, absolutely. I think I can speak really well to this because I was a super controller before I understood what it meant to be a CFO, honestly.
Mm.
And so I've sat in that seat, and I actually think it's kind of rare to be able to jump from a super controller to a CFO. It's two different wirings, is one of the things I'm finding, and not everybody can do both. But yeah, let's talk about that a little more. So I talked about kind of this framework I have, and in that framework we have like bookkeeping, we have staff accountant, which is like your I'll put it this way: bookkeeping is like a professional organizer. They take what happens and put it in the right bucket. A staff accountant is more of your financial processor. Those are like the day-to-day things that are happening. And then we get up to what I call kind of the management level. It's a controller. And a controller is like a budget master. They're really great at financial reports. They can nail a month-end close. And they're just really good at those systems and processes that so many kind of visionary strategic type people aren't really that great at, right? The phrase I've been using recently is they're like really great at accounting hygiene, like keeping things really clean and
Mhm.
really ordered, which is so necessary for a business. So please hear me. I'm not knocking a controller. It's super helpful to have one. If you don't have one and you're to a certain size, you're not going to make it without one. You need that person. But the way I describe it is I have kind of 6 parts in this framework. So the first 3 you've just heard are all backward looking. And the fourth one is actually backward looking as well. I call it tax compliance. So tax compliance is just about keeping you in line with the law, and it's taking what happened and filing it correctly. And then I have two what I call two main roles that are forward looking, and it's tax strategy, which we'll talk about a little bit later, and then what I call the CFO. So the main distinguisher I make between a CFO and a controller or a super controller is exactly what you said. A controller looks backwards and typically can't tell you what to look at because they're not thinking strategically like what form my decision tomorrow. A CFO is forward looking, and I call a CFO a strategic financial architect. And so I'm gonna break that down for you just a little bit. The
Yeah.
architect. So the six kind of things I just described in the framework, I believe that your CFO should be the architect of that entire system. They should understand from A to Z what's in place, how it works together. It's almost like an integrator, but for the finance function, right?
Mhm.
And making sure all those things flow together, but ultimately it's all pushing towards the strategy that you're developing. And so they take what's happened in the past and they don't try to optimize for the past. I feel like controllers optimize for the past, whereas CFOs learn from the past and then project it into the future, right? The other thing I feel like a CFO can really do is they can see a lot further in the future than maybe even your visionary can. That's going to be a controversial statement because visionaries are so, but they're able to hyper focus, and so they can start to see where all the paths kind of come forward into the future. And so I would say, the architect and the strategist are the two kind of main things that a CFO does. And that strategy is really a craft. It's really a craft to take a visionary, to take an integrator and what they're pushing for and to craft that into like a viable strategy for the business. And so, yeah, I think it's really about aligning with long-term objectives and projecting that into the future versus, optimizing for the past.
Yeah, I've seen this come up lately when we start to look at revenue per employee or profit per employee, and we're monitoring those ratios and we're trying to predict at growth or at scale, are those ratios going to still apply? Is there any more like juice for the squeeze to then be able to kind of, from a structure standpoint, look at the org and know who do we need to hire and when?
Yeah.
And yeah, there seems to be a big disconnect sometimes in those conversations with it feels like a revealing one where CFO is all on board, like they're ahead of it. And to your point, sometimes they can actually see it more clearly than the visionary can because they can see how the math plays out. But then if somebody lacks that, the visionary has the vision, but there's nobody coming in behind them to validate it with some of the data, the numbers to help them make more, I would call it data driven strategic decisions,
Yeah.
which, maybe a little wordy, but I think is the difference between gambling and trying to guess versus going, no, we know our ratios hold up until this threshold. We need to bring one more person in that's going to increase our output, and like really having some good predictive like forecasting measures in place.
Yeah. Yeah. What I hear you saying in particular here is about capacity, right?
Yeah.
Capacity is such a hard thing to nail down. And a good
Hmm.
CFO is like essential to helping you figure that out from a numbers perspective, right? They might not understand all the work you're doing, but a good one can ask the right questions to quantify when do we hire, when do we fire, when do we, in this growth kind of stage, who's hitting it, who's not. Like capacity is such a great measure for performance as well as for how do we do this in the future, right? And so I think being able to ask the right questions around capacity is just one small piece of it, but it's a very important strategic one for operations.
Yeah, and most people, it becomes very subjective.
Yeah.
Capacity is typically dictated by like when people feel busy, when they feel overwhelmed, and
Yeah.
there's usually not good like objective data behind it.
Right. No, that makes
Man,
perfect sense.
one of the other things I could not speak more highly of you when it comes to this idea of being able to sit at the table and have the business conversation as well as have the finance conversation. And I don't know how you feel about it, but I've said this about you, I think to your face as well as behind your back, is that to me you come across as bilingual, where you can match wits and speak the finance talk with any CPA, accountant, CFO, but at the same time, you can have that same conversation with the business owner and really kind of translate the two. And I've seen this happen already multiple times where a couple of projects that we've worked on together where you've gone into a meeting either on behalf of the founder or with them to their CPA and asked the right questions that they didn't know to ask and helped kind of translate those things. Or I'm thinking of more recently, a guy said like how grateful he was because you made him feel like he wasn't crazy. He's like, the number I'm asking for, like the things I'm trying to come up with and convey, like this person over here can't connect the dots to what I'm trying to do strategically as the business owner. And you were like, oh yeah, no problem. That makes total sense. We just need to do this and this. And you're able to kind of bridge the gap or connect those dots there. Could like, how do you look at that? Do you think of like almost kind of switching hats when you go from talking finance versus business strategy? Or do you think of it just like it's all in one and you're just using the
Yeah.
content and the resources you have?
Yeah, I would say it's all connected to me. I think I have a fundamental belief that maybe I've never vocalized that I think business owners should be able to do both. Not that they should be experts, but they should be fluent, right? They should be fluent enough to be able to navigate it, right? If you can't even ask the right question of your CPA, it's not like you haven't been equipped for it, so I'm not bashing you for it, but it's time to level up your skills and learn that. And so I personally think that both are very important. I don't expect everybody could do it at my level, but for me, it comes from being in an entrepreneurial family my whole life. I've just been around business conversations my entire life, and I've been really intentional to get in the room where they're happening. And so I would say that's how I've learned business, whereas my technical training and the accounting firm time is where I really understood finance. And so I think there's a conscious choice to go level up your skills in this, which can really integrate things together. I almost feel like that's like a great integrator skill set to be looking for when you're hiring an integrator is, can they speak both languages, right? The beauty of a really good integrator is they can talk sales, they can talk ops, they can talk finance, and they understand strategy. I mean, it's like you would think it's a unicorn hire, but really it's just somebody who understands business, right? And all the
Yeah,
different pieces.
that's a great way to put it. I was having a conversation with somebody recently, and I said, I think an integrator, oftentimes people lump together like integrator and COO, but I think oftentimes the integrator looks more like a CRO, Chief Revenue
Mm,
Officer, where they
mm.
understand sales and marketing, and they're going to understand cash flow and finance, but they're also going to understand operations. I think those two are more in sync. But what would you say, like, what are some of the questions people should be asking that maybe they don't realize they should be asking? Because I agree fully. Like, part of the reason you and I first got started was in the groups that I work with, where we work with a lot of COOs or director of operations, there was a little bit of knowledge gap around finances. And they often feel intimidated or don't want to ask their CFO or whoever it is in the org to, like, hold their hand through it. And so I just recognize, like, oh man, this is something that we need a little more expertise in. And we've used the phrase commonly of, like, you got to know where to look for the bodies. You got to be dangerous enough to know where to start poking around. Like, what kind of questions should somebody be asking? Whether they're the owner or they're the COO, what kind of questions should they be asking to know where to start poking around? Whether it's just asking themselves about their own financials, or it is asking their CPA or their CFO.
Yeah, that's a great question. So the other day I was having a conversation with a client. He was a new client. We were coming on board, and I was trying to just get my bearings on where he was. And I asked him this simple question. I ask it to everybody, and it's a very, very telling question: is when you look at your financials or when you look at your books, how do you know that they're right? And if you can't answer that question, um, there's some more digging to do, right?
Mm.
I think it's a great question to ask your bookkeeper. It's a great question to ask your CPA if they're helping you with that. Is, hey, how do I know this is right? And if they can't give you an adequate answer, honestly, you probably have a problem, right? Like that's stage one.
That's so funny.
Um,
So in operations, this happens where I will often say to people, prove it.
yeah,
Like, when it comes to the team's performance, they're like, oh, but they're doing really well, or like, oh, this is working, or this isn't working. Like, great, prove it. And it's that, like, I don't have any, data to actually back this up. So that sounds similar. That's funny.
yeah, I think that's a great way to articulate it. You need to go to your team and say, prove it. Like, I think one of the biggest pieces where this gets lost, especially in small business, is holding your people accountable who you're paying to do this stuff. Half the time, that's what I do. I just come in and start holding people accountable, and all the issues flush to the surface, right?
Hmm.
It's just asking these few questions. I would say I'm just thinking about how do you know, like, things maybe aren't correct. So I was also talking to another business owner recently, and he was explaining to me, like, in his gut, he knows, like, this number really, it's a certain type of unit. He's like, if we just do efficiency units, in my gut, I know that is our highest ROI, and I can't get the numbers to validate it or invalidate it. And it's like just kind of floating in ambiguity. And so
Mm.
I would say, like, if that's you, if you have like this kind of feeling or this gut where you're like, man, I really think this is true, and you can't invalidate it or validate it, like, there's a problem, right? The data tells a story. Numbers tell a story. A financial statement just tells a story if you know how to read it, right? And so when you have these hypotheses, if there's nobody on your team or your CPA or even just the data itself can't tell you, you might have bad data, right? Like, no amount of strategy or talent can overcome dirty data, is what I would say. And
Mm.
so that's where these questions or even these feelings are kind of geared towards. It's like, man, I know this should be true, and I can't seem to validate it, or I can't seem to say that it's not true. And so that's a really good indicator that you need to do some digging.
And is that something you recommend that they should bring to their team, or they should bring in a third party? Like if it's already just kind of left up to intuition, do they need to bring in, additional capacity or insight as a third party? Or is it maybe just something that they're not asking of their team or
Yeah.
asking in the right
Yeah,
way?
that's a great question. I would start internal, right? Like, I mean, I wouldn't always just defer to like I need to go get an expert
Sure.
and see if they can see what they come up with and if it passes the test, right? And makes sense. A lot of times we are not able to articulate our questions super well, and like it's kind of what you said. Like, not everybody's bilingual, so
Mhm.
your accountant that you have in house might not be able to understand what you're asking them for. And so maybe that's where a third party really helps, is having somebody who can kind of speak both languages and help them understand what they're looking for. Accountants don't think operationally often. They're very much focused on like GAAP and like how do we present these financials accurately. And you're like, yeah, I don't care about that. I want to know if the efficiency unit's my highest ROI, right? And it's just a different mindset of what you're looking for, right?
Yeah, I think the gap I often notice, and again, this is almost kind of back to that controller CFO conversation, is just the revenue side of things. I've worked with some awesome controllers, super efficient, proficient, just incredibly talented people who would chase down dollars to the point that, there's times where I've logged in and I'm like, what, where my account doesn't work anymore. And you finally like troubleshoot, figure it out, and it's like, oh well, the controller canceled that subscription because they thought nobody was using it, and it saves us $150 a month. And it's like, well, I appreciate you for chasing down the $150, but I use this every day, and like nobody asked you to do that. Like chase down, is there a threshold there? Like, I don't know, chase down $1,000, but at $100, like, are we just spinning our wheels, as opposed to going like, man, my energy and effort would be better spent on revenue, and how do I actually
Right.
get an increase here, right? How do I optimize cash flow or conversions, rather than just, when they are really proficient and efficient, chasing down dollars, and all of a sudden it's like there's not many dollars left to chase down, and so the dollars just keep getting smaller and smaller, so now their impact actually becomes less.
Yeah, and that's a great point. I would put it like this way: there, you can only cut so much.
Yeah.
um, like there's a very like limited threshold where you get to of getting lean, right? And I think a lot of the best businesses have a time when they're lean, but there's actually a proverb. It's in the book of Proverbs. It says, "Don't muzzle the ox while he treads the grain." And I love that for business, because if you don't give your team what they need to go out and sell or fulfill, you're actually going to hurt them more than you're going to help them. And I see a lot of, kind of controllers, accountant, super controller types that they come in and they actually cut their guys off at the knees by cutting things like you're describing here. And I'm like, dude, don't muzzle him. He's out there getting sales. Give him what he needs. And so, what I would say about that is there's a growth minded CFO, and often controllers aren't growth minded, they're optimization minded, which is what we talked about before. They're optimizing for the past instead of growing for the future. And what a controller might consider sunk costs, I would consider a great investment in a team or a software. And so it's a mindset shift here. And so I'm a huge believer in like giving your people what they need to succeed. And often that looks like a software or uh, another team member or something like that. Obviously, you want to be super responsible and a good steward of what you have, but there's processes you can put in place to review that stuff. So that would be how I respond to that.
Yeah. When you're looking at financial statements, balance sheet, where do you immediately go to? Like where is
Yeah,
your eye drawn to?
yeah, great question. So with a balance sheet, we'll start with a balance sheet because most business owners don't look at their balance sheet. Uh, the way I think of a balance sheet is for almost every account on there, not everyone, almost everyone, there's an outside statement of truth it should be tied to. So, for example, if you have a cash account, there's a bank statement. And if those two don't match, you have a problem, right? So,
Mm.
like in 30 seconds, if I have your bank statement balance and your balance sheet, I can tell you whether or not your financials are correct, right? I like the balance sheet for telling me whether it's right. And by right, I mean like the numbers are true. You could do the same thing with a loan, right? You got a loan statement. If it doesn't match, you could do the same thing like if you purchase an asset, if that doesn't match. And so I like the balance sheet for kind of the statement of truth outside things that I'm looking into. And then on the profit and loss, here's how I'll describe it is your balance sheet could all be entirely correct from like the number of dollars, and your profit and loss could be completely wrong. So the profit and loss is where categorizing things into the correct buckets, is how I like to call them buckets, is so important, right? And so, if you have a lot of office expenses up in cost of goods sold, now your gross profit's all screwed and you're making decisions based on data that doesn't really make sense, right? And that's where I mostly talk about dirty data, is like, you just don't have intuitive like accounts on your profit and loss. So when you look at it, it doesn't make sense to you, right? This is what I say. Most of the people I work with, most small business owners, they're not beholden to anybody. Maybe a bank wants to see their financials, but they're not asking for a gap reviewed financial. And so, some low hanging fruit here would be like either with your team or with an outside consultant, like, man, redo that whole chart of accounts and make sure it makes sense for your business. If you can't read it, what's the point of the financial? Like, it should be what you're using to make a lot of decisions. And so it should be really intuitive and make a ton of sense to you. And I think one of the problems is like letting your accounting software or even your CPA build your chart of accounts is a mistake. Because like, I'll give you an example, QuickBooks. You go in, you tell them your industry, they'll drop like 200 accounts in there and you need like 25, right? And so there's just a lot of noise, and it's really hard to discern the signal from the noise in your financials. And really what we're looking for is signal, right? And so if you get, a lot of times when I come in, I'll take somebody as close to zero as possible on the accounts, and then we'll build it out based on what their business actually does and what they care about and what they're trying to understand. But when you say, so one, my eye's drawn to like, do these accounts even make sense for the industry that you're in? The other thing I like to do is do what's called a T3. I run a T3. I almost never look at a financial statement for the current month by itself. It doesn't really tell me anything. I like a T3. I'm looking at the last 90 days. So I'm looking at 3 months side by side. And I love to do something called horizontal review. And horizontal review is just what it sounds like. I'm literally just looking across the 3 months, looking for anomalies. Often you can spot stuff in about 90 seconds. You can read through the whole financial about 90 seconds, pick 3 or 4 accounts you need to go dig into that just don't make sense based on the trends, right? So doing a T3 is often.
And are you doing that purely just off of looking at the numbers? Do you ever graph any of this? This is one of the things I find sometimes with business owners is like, they kind of gloss over when you start putting a ton of data or numbers in front of them. But if we put visual aids, graphs, and plot things, it makes it easier sometimes to even recognize the plateaus, the spikes, the valleys. Like, what do you recommend there?
Yeah, that's a great question. I actually use a software called Fathom that'll connect with QuickBooks, or you can dump Excel stuff in there. It depends on whatever kind of accounting you use. And it does a really great job of visually kind of doing the reports. And so I built a T3 kind of version in there that like, if you were my client and we would walk through this report together every month. I call it like my CFO report. Right. And we're walking through, all right, how did all the financials change? We have normal financials in there, but even those, it'll have a percent and it'll either be green or red. Like we're matching trends. It's those things that kind of break up the monotony of it and help your eye go to, oh, gross profit's down. That's a big deal. It should be red. We need to talk about that, right? And so I like to use percentages and colors. Those really help. But it'll do these beautiful graphics. They're all just kind of standard built in there. Nothing, you can literally drag and drop. So it's super user friendly. You don't have to have any code experience. I do think you probably need to understand accounting a little bit if you want to build it in there. But so that's one I use that makes beautiful reports for it.
When should somebody make the transition if they're running their financials right now off of a Google Sheet? When should they make the transition to QuickBooks? How do they know they're ready?
Yeah, great question. I would say there's a couple things here. One, volume of transactions. I know that sounds like duh, but one of the beautiful things about QuickBooks is it can just pull in your bank feed automatically. And you can actually use AI and a bunch of rules and things like that where you hardly have to touch it for it to categorize things correctly, especially things that are recurring.
Yeah, we'll touch on this a little bit because we've done some cool stuff for some mutual clients where you've tied in even like Home Depot receipts that go to their email that get scrubbed and pulled in, and like they're no longer having to do all this manual entry.
Yeah, that's a great point. So there's a couple softwares out there that I really like, love and appreciate. They're typically tied to a credit card. So a ton of business owners where they get into a mess is their credit card spend. And then, I when I first started as CFO, I would have these sales guys come in with like a shoebox full of receipts for the past 6 months, because these were outside traveling sales guys, and I would, you just cry. Uh, and so these technologies, so the two in particular that I really like are Ramp and then Bill, Spend, and Expense. What they do, you can build budgets, you can build thresholds, but let's say, for example, I was traveling out to see you, and I just got my rental car and I'm headed there, and I stop by the gas station and I swipe my card. I'm going to get a text message and a notification on my phone saying, please upload a picture of the receipt. I upload a picture of the receipt. What was it for? I say what it was for, fuel. It grabs that data, ties it to the transaction, and categorizes it for me based off of 10 seconds it took me to text the picture. And so it's just streamlining these things that happen every day. Your guys are going to spend money on their card. You need the receipt to comply with the IRS, and if you ever get audited, to cover yourself. And your team's going to have to categorize that correctly for you to have good data to make the decision. And so why not let a technology that is actually free, it's free. It doesn't cost you anything. You just have to use their card. Do it for you. And then it integrates automatically with your accounting software, and it's done. So you can have real data today in your software from the card that was just swiped. And so I think one of the problems and one of the things that you're kind of describing is that everybody's working on like the 30-day, what happened the last 30 days? And it's like, no, what happened today? What happened yesterday? And the majority of people I talk to couldn't tell you because they don't have the right systems in place to be able to see their data like that, right? And it's really helpful. When you're growing, often cash is crunched, and it's like, all right, I need real visibility today. What's going on as I'm making these decisions? Yeah, Bill, Spend, and Expense, and Ramp are the two softwares I like for that. But to go back to your question about like when should I get off Google Sheets, I would say yesterday, only because it's manual, it's clunky, and it's not a good use of your time. If you're a real estate investor, I think that's mostly who we're talking to here, right? Why are you doing that? Like, you shouldn't be doing that. And there are simple systems you can put in place that will take care of it for you. QuickBooks also has a new product out. It's called QuickBooks Ledger. So especially if you're not like invoicing anybody out of QuickBooks, it's literally just a historical version of QuickBooks that is designed to create reports and to make filing taxes easier. And it's about 1/4 of the price of their cheapest version right now. And so I find this one really appealing for a lot of real estate investors who, I come across a ton who have 20, 30 entities for all their different properties and things they have going on. And, nobody wants to pay $2,000 for accounting software. But if you could pay $500 and have clean taxes and it's all done for you, it makes a lot more sense. And so I really like that new product they've rolled out, QuickBooks Ledger. So I think that makes it irresponsible to be doing it in Google Sheets. You should just move on, right? And the time save will be worth it as well. You should be out there acquiring deals, running analysis, raising capital, all the things that you're best at, not looking at your accounting. You should be aware of it, but you shouldn't be doing it.
Sure. We've all heard the phrase trusts but verify. When the business owner starts to hire some of this out, what should the business owner be looking for when they start to hire some of this out? Like, how do they make sure to verify what it is their bookkeeper is doing or what it is their staff accountant is doing for them?
Yeah, that's a great question. One of the things I say is delegate, don't abdicate. And what I mean by that is delegation is, here's what I need you to do. Here's how I want it to be done. Go do it. Whereas abdicate is, here you go. You just hand it off, right? And so one of the things that I always think about when I hire is I hire for playbooks. I don't hire necessarily for task. What I mean by that is like, I'm willing to pay a premium for somebody who already knows how to do this the right way. Right. So even when I'm vetting a bookkeeper, like if it was my business or a CPA, I'm like, well, they have the playbook. They know exactly what to do. I'm willing to pay more because that's going to get me the result I want. Right. What I see so often is people will hire like their daughter-in-law or their aunt or their cousin or, that lady from the church. And it's like good intentions, but they have no playbook. Right. And so they're just going to do whatever you tell them. And you don't know what to tell them what to do because you're not a finance guy either, right? And I see that often. And so, I would say understanding what plays they should be running just going to keep using that analogy here, is super important, right? And so you can delegate it, not abdicate it. And I'd say one of the keys to delegation too is accountability. Like low hanging fruit here, hold them accountable to what you're asking them to do, and ask some of these questions, like that simple question: Hey, how do I know this is right? Like trust but verify. And if they can't give you a good answer, like go find somebody else. I see it over and over. Like we give people chances, and it's just like, okay, they're great at categorizing transactions. You need way more than that today. And so, yeah,
So what kind of
that's what I would say.
outcomes should they be asking them for, holding them accountable to? Like what kind of language should they be using?
Yeah, that's a great question. Well, from an outcome perspective, like if it was my business and I was paying for bookkeeping, I would want my books closed pretty quickly. So it used to be standard that it would be done by the 20th of the month. I don't think that's necessary anymore. Like I said, we have so much more access to real-time data. We're not waiting for the bank to send us a statement. We're not waiting for a bunch of this other stuff. I would expect it to be done within like 10 days. And what are closed books? Closed books are that so maybe this is helpful. You can make a checklist as you're listening to this. Every balance on the balance sheet, every account is verified. If it has a statement of truth, it's been reconciled and verified. On the P&L, you've done horizontal analysis and it passes the test, right? I call it the smell test, right? When you look at it, it kind of makes sense. There's another thing called vertical analysis. I typically don't have business owners do it. It's a little more financial. That could be a good one though. Like if you have a finance person, you could ask them to do vertical analysis. Go Google it. They can probably do a better definition than I can. But those are some simple things. But for me, I would say like, hey, I need a cash flow statement. You'd be shocked how many accountants, CPAs, bookkeepers can't give you a cash flow statement. I can't stress enough. Like if you're not looking at any other statement, look at that one. As a business owner, it'll give you the most information and help you make the best decisions you possibly can, even if you can't see anything else in the business. Like get a cash flow statement, learn how to read it and how to use it. And so I feel like that's a really good one to ask for, and for them to produce. And then once they produce it, I would ask them to validate. Like it's kind of what you said, validate these numbers for me. Hey, how do I know this is right? And that is like your go-to question. How do I know this is right? How do I know this is right? How do I know this is right?
Yeah.
And they should be able to justify it. Even anomalies, right? Like when you have something that looks like it shouldn't make sense, they should be able to explain it, right? And that's what I'm looking for.
I think there's a fundamental here though that where as a business owner, you have to hire people that are better at what they do than you are. And I think a
Yeah.
lot of times, whether they're trying to cut corners or be cheap, they end up hiring people who are not as proficient. And so there's a default sometimes to hiring yes men,
Yeah.
right? And so
Yeah.
they're not actually more efficient or proficient at the finances versus I think of it like, like when you and I talk, I show up thinking like, teach me something because I know that there is stuff that you know that I don't know. And I feel like as a business owner, they should probably have that same mentality with their CFO going, hey, you just did a vertical analysis. Tell me something I don't know. Like, teach me something. And I think that there's a mixture there, maybe like fundamentally of some humility or some strategy of do you have the right person? Because are they able to teach you something that you don't know?
Yeah. Oh, that's super good. Well, and if we're talking CFO, so what I was talking before was more of like accountant or bookkeeper.
Hmm.
We're talking CFO. Oh, that's a no-brainer. Like
Yeah.
they should have a way better pulse on it than you do and should be informing you of what you need to know.
Even from the accountant level though, I think it's become so popular in our day and age to hire like VAs for everything that it's kind of started to brainwash people in this mentality of like I'm just going to get a bunch of order takers who can just go and execute the thing I tell them to do rather than going no, you're a specialist at this thing or you specialize in this one area of the business. I know we've talked about this before of like sometimes the jump business owners have to make is in professionalizing the business, going from having a bunch of generalists who can all kind of do some stuff to being like, no, you only do sales, you only do marketing, you only do finance. And by siloing those out, we actually level up those people. And so I think there's almost like two different strategies at play here where people got to get from one side of the fence to the other to be able to have some of these conversations and extract some of that out of that person.
Yeah, that's super good. I would say a CFO also should they should help you be a business that invests in real estate, not a real estate business, right?
Mm,
Like you got to be a a real business, and what your product is you invest in real estate, right? Not
hmm
a real estate business. Like Does that make sense? Like,
Yeah.
I think our real estate investors here will understand that nuance and what you mean by professionalizing. When you say professionalizing, that's what I hear. Oh, you turn into a business that invests in real estate.
Yeah.
Yeah, and that's a huge jump. And kind of speaking to the VA thing, I think when you're small and like you're beginning to delegate, that's a great first step. Hey, I need you to go in daily and categorize these transactions, or I need you to pay this bill. Like, fine. Uh, You'll reach a threshold where that's no longer fine, right? And you got to get somebody who's specialized who can take care of it for you. I call it that staff accountant. That's kind of my, like, for me, that threshold when we go from bookkeeper to staff accountant is where I have to get somebody who actually has some skills in it. And they're like a financial processor. It's what they do. They understand what needs to be done day to day. You still might need to give that person a playbook. Oftentimes, it's more of an entry level accounting position, and so they need a playbook to follow. But they're starting to understand why they're running the plays, how they work, and what you actually need them to
What's
do.
like what's the skill or the knowledge that that person has that levels them up from being that professional organizer, as you put it?
Yeah, I mean, I'm going to sound like an accountant here, but like a basic knowledge uh, of accounting, of balanced accounting. So for me, I would say like the way
There's
I
like a
would
little
test
bit more like
somebody,
classical training that goes into it.
maybe. I mean, not necessarily. It's just
Okay.
the way I would describe it. How I would test somebody is I would pull out a financial statement, three of them. There's three for a reason, just so you guys know. Balance sheet, profit and loss, and cash flow statement. And in my opinion, they're circular and they all connect to one another. And so the way I would test somebody is I would give them a financial and I would say, hey, will you tell me the story about how all these connect? And if they can do that, they understand accounting.
Hmm.
And I don't have to worry about that person because they understand how what they do over here affects this statement over here, which flows down to this over here. If they can get that, they're gonna understand what's going on in your business. They're gonna understand what's going on in your accounting. They might not be a great storyteller, but they're gonna be able to tell me at least follow the flow of what the story that those financials are telling me.
Hmm. That's good. A few years back, I took a graduate certificate program in financial accounting. And part of it was because I had a client at the time who was, they didn't have somebody in that seat, and it was a big pain point in the business. And I was a little bit interested as well, just trying to become a little more well-rounded. But one of the things that was so revolutionary for me was understanding the difference between cash and accrual basis. And it was just like light bulb of like, oh, this is why this is so confusing, or like this is why these numbers don't make sense or match up. So one, could you summarize that for us? And then two, like what other kind of concepts or things like that would be like light bulb moments for people where maybe an operator that has never been trained on anything as it relates to finance, as they're digging into the business, is like, man, it's gonna be really hard for you to make progress or even just communicate if you don't understand this or you don't understand this or how these things work.
Yeah, man, that's a great question. Cash versus accrual. Okay, I'm gonna make this as simple as possible.
Yeah,
Cash
please.
accounting, um, things are only recorded on the books when they hit a bank account, when they actually happen. This is gonna be funny because I'm gonna say accrual accounting, they hit the books when you say they happen, not when they actually happen. So I don't know if that makes sense, but I'll give you an example. So if you're on accrual accounting if I'm on accrual accounting and I invoice you $10,000 for services, that hits my books today. I count it as revenue today. I pay sales tax on it today. If I have sales tax, I don't have any money. You didn't pay me, but it hits my books, shows up on my financials, and I need to account for it. That's if I'm on an accrual basis. If I'm on a cash basis, I send you that invoice and nothing happens until the day you pay. The day you pay, it hits my books, and now I have income, right? That's like the easiest example I can give you of the difference, right?
Yeah. One of the ones that
And
was helpful for us was when someone has like a coaching business and like say they're selling a year-long program, but they sell it up front,
yeah,
and how that plays out from an accrual versus cash standpoint.
yeah, no, I mean that's a great question. I'm trying to think. There's another like term that often is used. It's about like when revenue is earned
Mm,
versus when it's received is
hmm.
another way to think about it. So in
Okay.
accrual, it's about when it's earned. When I send you the invoice and I get started, it's earned, right? Whereas when it's received, that's on a cash basis, even if I've already done work and I've already earned it. So, you know, if you were to pay at the end. And so if you're going to do what you're talking about on the coaching, you have been paid for stuff you haven't earned. And so if you're on a cash basis, you got to record it right now. And in theory, if you don't have guarantees or anything, it actually is revenue right now. But if it's not, you could potentially, you know, they bow out halfway through, you have a refund kind of thing in there, and you get surprised with the fact that you owe them this money, right? And so from an accrual basis, what I would do is I would record that as income on one side, and on the other side, I would hit like an unearned revenue account. And so it actually shows as a liability on my account. It actually shows that I owe that to somebody because I haven't earned it yet.
You owe those services still, right?
I owe those services, and it's a way to, like, accrual is a way to account for things that you haven't earned yet, is how I would describe it. Things that you still owe. And then every month,
we know when to pick which one.
Yeah, I would say pick cash unless your CPA tells you otherwise. Typically.
Easy.
Typically. Yeah. One of the reasons I would say that is a lot of CPAs actually convert accrual. Like if your books are in accrual, they'll convert them to tax for cash purposes. And so just having that conversation with them about how am I going to do this? And it's a little more technical than we probably have time for here. But, you know, one of the things I'll say is like, man, have a conversation. One, have a good CPA, but two, have a conversation with them regularly to make sure that like what you're doing makes sense for the tax strategy you have in place.
How does somebody know if they have a good CPA?
Yeah. Well, if you're in real estate and you pay taxes, you don't have a good CPA. That's what I'll say. No, really. I mean, the majority of clients I work with don't pay taxes, and they probably never will. And it's because the law is designed for depreciation and just kind of these other tax strategies that exist that you really shouldn't be paying tax if you're in real estate, if that's your primary profession. There's obviously some ways in there that you maybe can't get around, but for the most part, if you're investing in the asset of real estate, there's not a reason to pay taxes. And so if you don't have an accountant that understands that strategy and can capitalize on it, like go get another CPA. The other thing I would say, and this terminology, I haven't spoken about this like publicly on a podcast or anything, but there's like this gray area in the tax law, and you want a CPA that lives in the gray, is how I would put it. And then when the lines get bright and it's like this is off limits and this is okay, you get on the right side of the line as soon as it becomes clear. But until it's clear, live in the gray. The gray is where all the tax loopholes are. It's designed specifically to be there if you know how to use it. And so if you don't have a CPA, if you have like many CPAs they're so squeaky clean and they just live in the white and they're just not comfortable in the gray. But the gray exists for a reason. It's lobbied for, it's created for business owners to help drive investment and to drive growth in our economy. And so I would say if you don't have a CPA who understands the gray, like that is a really good way to know if you have a good CPA.
All right. Let's go down the real estate investor lane, because I think that's probably where you and I have collaborated the most is with investors. What are some of the common mistakes that you see on the finance side? What are some of the things that like could have been avoided, or maybe you're just kind of new to people where they're not even thinking about it, that maybe it should be on their awareness?
Yeah. You know, one we talked about earlier was letting your accounting software build your chart of accounts for you. It's like very technical accounting stuff, but it makes it where I see this mistake so often. They like don't know what's going on in their financials because they don't even understand what most of the accounts are or what they mean. It's like, man, let's build something that makes sense to you that will still, obviously it'll comply with IRS and stuff, but I say that's a big mistake. This one's going to sound so silly. This is like accounting 101, but recording your assets and liabilities correctly. I actually see this is like a huge issue for lots of real estate clients I've encountered. And it's, you know, just recording a purchase transaction and what you owe on it correctly. And if your bookkeeper can't do that, I'm actually not that surprised. I feel like bookkeepers aren't super equipped to record journal entries like that. That would be more of your kind of staff accountant role. And so what I would advise people I just give you some low-hanging fruit. Like when you purchase something, it's worth it to send it to your CPA and say, how do I record this journal this entry into my books? And they might charge you for an hour, but you're going to save yourself so much headache at the end of the year. And I think their fee for actually doing your taxes is going to be a lot lower if you consult them throughout the year on things like this.
Interesting.
So that's one I would say. And I would say, man, that you have a CPA who's a strategist for a reason. There's actually strategy behind how you record those things and how they're classified and whether you expense something or capitalize it. And like a lot of that happens up front. And so doing that correctly.
How does somebody know if their CPA is a strategist? Is it back to that like gray versus white?
Yeah, I would say gray versus white for sure. So the way I describe it is tax compliance versus tax strategy.
Hmm.
I think a lot of people think they're getting tax strategy and all they're getting is compliance, right? If your CPA isn't specifically selling you strategy, you don't have a strategist. They know that it's strategy and they want to sell it to you and they want you to pay for it. You are probably getting compliance, and one meeting in October to try to project what you're going to owe at the end of the year is not strategy. That is reactivity, right? And so I would say, I feel like most strategists meet at least quarterly with their clients and they're very proactive in building like, what do we need to do now so I don't get stuck with a tax bill at the end of the year, right? Whereas with compliance, you might get one meeting towards the end of the year where you have 2 months left and they'll tell you to buy a truck or something, like it's not much. It's not much. Mm-hmm. And the difference is stark. So if they're not selling you strategy, you're not getting strategy. That's what I would say.
Got it. Okay, back to the investor. What else should they be looking for? What mistakes do you commonly see?
Yeah.
How do they take a step to at least start professionalizing their operations?
Yeah, so a couple questions there. I would say a big mistake I see is focusing on net operating income. So this is a hot take for you. Yeah.
Yeah, we talked about this recently with you mentioned talking about this with Pace Morby.
Yeah. So Pace said something from the stage where he said, I don't care about NOI. It's a horrible metric. Don't use it. And so I hunted him down after his talk and went and just had a conversation with him. And what he said just totally aligns with my own mindset on it. He said, cash flow is everything. Like, I don't care about net income. I care about cash flow. And I would say that's a big mistake I see a lot of real estate investors make, is they do have this great mind for long-term value and appreciation and what the asset is worth, but they can often be a little short-sighted on cash flow. And so there's this, if you go look it up, it's kind of bouncing around the accounting world, but I really love it. It says, where net income ends, cash flow begins. And why this is so important specifically for real estate investors is you could have $20,000 in net operating income on your P&L and $25,000 in debt service over on the balance sheet that you're not going to see. And so I would say the cash flow statement, I said this earlier, the cash flow statement is the most important statement you can look at because it starts at net income and then it works its way through the balance sheet and equity. We could probably do a whole podcast on learning how to read that, honestly. But you can see, where does all my cash actually go, which is the question every business owner is trying to answer. Like when that top line revenue doesn't match with the cash in my bank. Yeah, when it doesn't match with the cash in my bank, it's so confusing, right? I hear that all the time from people. Yeah, I had a business owner tell me that the other day, and I was like, "Oh, well, what does your cash flow statement say?" And they're like, "What's my cash flow statement?" And we went and look at it, and it's very enlightening. And it's like, wow, we got to get out of some of this bad debt. Like it's eating our cash. And so, I would say a lot of starting real estate investors, or even big ones, honestly, they focus on net operating income and they don't look at the cash flow, and then they get confused when they get crunched, And so I would say that cash flow statement's really, really important. And then you said, what are some kind of like high impact, low effort type things that they could do to start to professionalize? So I would say pay for a top tier tax strategist. Like it's low effort because you're paying for it, and then you have somebody coming in with the playbook. It's what I'm describing, right? Like, pay for the playbook. It's worth it, especially for tax strategy. I would probably start by asking my bookkeeper or my internal team, like, how do I know these are right? How do I know it's right? How do I know? Like, ask it about every number. They're going to be so annoyed, and they're either going to be able to tell you, or they might even quit. We've seen that happen. But right, when you start holding people accountable, the A players rise to the surface, and then everybody else fades to the background, right?
Yeah, I say this commonly. It's like everybody looks like a B until you insert some data accountability, and then the C players that are fooling you and making themselves look like Bs start to get revealed, and your A players that don't actually know what the expectation is or what the target is all of a sudden reveal themselves. Yeah. And so it's a huge separator where your B players split and you now have A's and C's.
Yeah, and I would say this is such a great question to reveal that to you. If you're a bookkeeper, if you have any questions about your bookkeeper, like, go ask him this question. It'll really surface it for you. One other thing I would say, and this is like a shameless plug for myself, is get a diagnostic done. So we do what's called a diagnostic, and it's basically
Hmm.
just get a pro to take a second look and help you identify like where are we actively, what are the gaps we have, and what do we do? Like what are some strategies to fix this? And
Yeah.
so, like a good diagnostic will say, here's how you can do it, here's how I can help you do it. Right. And so that's like a really kind of low effort. You pay somebody, give them access, they come in and look at it. But it can have a ton of impact. You can start to see like where you're going to gain the most ground quickly, so you're not wasting your time.
Yeah, because I know even from clients that we've worked with together, when you come in and do a diagnostic, it brings a ton of clarity to where they specifically need help. Like, is it in getting caught up? Is it in like the hygiene, I think as you put it? Like, do we need to clean up some of the data? Or do we need to start to professionalize some things to get them set up for whatever that next level of growth is that they're trying to go after? And so I think it's a great way to kind of get the bearings to go, okay, I don't even know what I'm looking at here. I don't even know what kind of help I need yet. And so I think that's a great idea. Okay, a couple more questions for you. When it comes to all the different hats that you wear, what would you say is like your superpower? Like, what makes you different compared to every other CFO out there who has similar background or experience?
Yeah, I think you touched on it earlier, and I'll just lean into it. I would say it's that bilingual nature, right? I can really it's the language of business that I can actually speak it, right? And just understand how all the different pieces integrate together and how the finance function should come alongside and support everything else and help it grow and empower it to do what it's supposed to do. And so another way I put it is like I take some of these like complex business challenges across the business, and we can create some actionable like strategic solutions from the finance seat towards those, right? And
Mm,
yeah, the superpower is empowering the rest of the team to do what they need to do.
yeah. Oh, that's great. Okay. Whether it's business or outside of business, what excites you? What makes you giddy? What gets you going?
Yeah. Oh, that's a great question. I would say what excites me more than anything is multiplication. So
Spoken like a true accountant.
spoken like a true accountant and father of five. About to be six, actually. Yeah. So when you take something simple and you 10x it or you 100x it, like the impact and opportunity that that creates is just so exciting to me. And so while
Mm,
it's fun to like optimize things, I'm way more interested in scaling things. And it's really
mm,
exciting to me. And I actually think about that like in all of life. And I'll give you a simple story. So last night with my sons, I've been asking myself, like, how can we 10x our summer as my family? Like, how can we multiply like how great our summer is? It's like, we need a trampoline. Like, we need a trampoline. I live in Dallas. We have small lots. And so there was this like little playhouse that I built with my kids a couple summers ago. And it's like, so sentimental, and it's like it's got to go. And so we created a new memory destroying that playhouse, which one that like took our summer up a little bit, right? Super fun. But we also created space for a trampoline, which is going to multiply our summer and make it amazing. And so it's not just business, it's all life. I think about this in every area of life. Is like, man, how can we take this thing up not just one notch but 10 or 100 notches? And I just see the life that that creates, and it really excites me.
mm. Oh, that's great, man. Where can people connect with you? Where can they find you if they want help with the diagnostic, if they want you to full on just come in and start chopping heads, or if they just want to hear a little bit more about like advice and maybe where they should start dabbling in some of this stuff? Where's the best place to connect with you, reach
Yeah,
out?
yeah, great question. So my website, which we will link down in the description of this, and
Great.
then
Yeah.
you can also always connect with me on LinkedIn. Is a good spot.
Okay.
So
Awesome,
yep.
man. Well, dude, super appreciate you being on. I know it's been, gosh, we've been chatting for over an hour, but I feel like, man, we get rolling on some stuff, and there's just so much synergy when it comes to helping people in their finances and in the business. And I just want you to know I super appreciate working with you and appreciate you just in general. But thanks for being on and chatting with us.
Likewise, man. Thanks so much for having
All
me.
right. If you enjoyed that and you want more access to some of our tools, resources, toolkit, frameworks, the things that we use with one on one clients, even clients that Grant and I have worked with together, you can click the link below to get access to some of our resources where you can use the same frameworks, the same tools that we use for our largest clients.